Welcome back, everybody. So today we're going to tackle lesson 3, and we are going to do essentially an extension of our previous video where we did the crossover between the EMAs and SMA, and now we're going to add a little strategy and a backtest to see, is it even better than just holding the asset by trading those crossovers. So let's get started. Really simply, put your installations here. The libraries that we need obviously is yfinance, matplotlib, pandas, and numpy. And the first snippet of code we're going to put in are the imports. So we import the libraries and we fetch the data. So I've set it to 2016 to begin with and end on the last day of 2024. And once we download it, we also get to see what the data looks like. And these are the columns that we have with the dates. Perfect, simple as that. So the next thing we're going to do is actually create two different EMAs this time, EMA 12 and EMA 26, and we'll be using the EWM function from pandas. So that's actually the only two EMAs we need for the crossover. And we can also check out the tail after we've done that. Perfect. All right, now we've got the data and we've got the indicators. And now we're going to create some crossover signals. So this is essentially telling us, look, EMA 12 has crossed above EMA 26, and this is a buy signal. Otherwise, it's a sell. And it is actually as simple as that. But now we just want to actually plot this data and see what this looks like before we do any backtesting. So we've got the BTC price in blue, and we've got the EMA 12 in orange and EMA 26 in green. And we can see it starts from 2016 all the way to 2024, the end of it. And there are many, many really good signals to buy and to sell, with especially these huge swings here. So I think overall it will be really interesting to see how this performs. Buying and selling based on these crossover signals versus just simply holding. So the next snippet we'll put in is a very, very simple backtesting strategy. This is nothing that the professionals would use, but this is something just so that we can get a percentage change from the strategy and the daily returns, and we can see exactly what that means for us. So we've got that running, and now we'll actually just plot that. So blue is saying if we market hodl, what our assets will be. And essentially the market hodl will be the actual closing price, because let's say we bought it 2016, so it's essentially the equivalent of the closing price of Bitcoin. And then we've got the strategy return from our EMA crossover strategy. So initially it doesn't perform as well. For 2018, 2019, it doesn't perform that well. But then starting after 2020, it starts to be on par, and it actually starts improving post 2022 dramatically, actually. So I'm betting the weight of wins after 2022 outweighs the losses of 2018. And we can simply run a print statement to check that, to see what the percentages are. So if you hodled, you would have gotten essentially 21,000% return from the first day of 2016 versus 23, or we can really round this up to 24,000% doing the EMA crossover. Now, they're both very high returns, to be honest. And this might not seem like significant at all, but it is. And still, you're to be honest, just holding would be the easier thing to do instead of trading this. But just to show you that a very, very, very simple strategy of buying and selling the crossovers up and down has given us a slight improvement on just holding. You can wonder how many more improvements we can make to actually, make a much, much bigger difference in returns versus just simply holding. So yeah, just wanted to share this with you. This is, again, really, really basic stuff. And we'll be building more complicated models as we go on, but this is just like to get you started to understand what we're actually looking at and what this type of backtesting will look like. So yeah, I hope you enjoyed that, and I will see you in the next video.